Well, good afternoon and welcome to the Market Wrap for Tuesday, the 17th of February. And look, it was another fairly quiet session for the Aussie market today. Of course, we had US markets shut last night for the President's Day holiday, and that meant we looked to European share markets, which didn't do a whole lot last night. In fact, they only just edged higher. So a fairly quiet day for the Aussie market today. We lifted ever so slightly, ending the day up by around 0.25% or around 22 points at 8,958 points. Keep in mind though, we did get within 10 points of a record high late last week, so investors are just taking a bit of a breather after getting to those levels. And of course, we have China's markets shut all week long for the Lunar New Year as well. So it's been a quiet couple of days so far, but things will likely ramp up from tomorrow onwards as reporting season starts to heat up even more, and we have US markets back online tonight. Now, looking across the different sectors, we actually saw most of them falling. Only 4 of them actually improved today, including healthcare, which only just edged higher, consumer discretionary up by around 0.5%, consumer staples up by 1/3, and materials actually doing best today, lifting by 1.3%. On the other end, real estate went in the other direction, falling by over 1%, and it was mostly modest moves, either higher or lower across most of the other sectors. Fairly modest moves pretty much all round today, including our largest sector, financial, which ended flat for a second straight session. Looking at the winners though, of course, we have to mention BHP because its share price jumped by 5% by the end of the session. It was up a little more earlier on. It climbed to a record high today, and that was after the mining giant beat expectations with a 28% jump in net profit and also a bigger dividend thanks to its growing copper division, with the copper price rally driving higher profits. In fact, BHP alone lifted the market by 35 index points on a day where the broader market only rose by 22 points. So certainly a big support and offset some of the losses we saw elsewhere across the market. It was a big bright spot if you looked at a heat map today. In fact, if it wasn't for BHP, the Aussie market likely would have ended the day just slightly lower. So a big help today. Elsewhere, JB Hi-Fi lifted most on the ASX 200, extending yesterday's gains after posting record half-year sales and also raising its dividends. So it's up about 16% over the past 2 days, and that's despite receiving several target price cuts during today's session. Temple & Webster climbed after a major shareholder upped their stake in the company. Its shares up 4.7%, and Baby Bunting reported a 4.7% lift in comparable sales, and that was above the company's guidance range of 2 to 3%. So its shares taking off in today's session. On the other end, Reliance World was the worst performer after the plumbing firm had a challenging first half. It reported a 35% drop in net profit, dented by the impact of US tariffs, as well as weaker demand in the US and UK. So its shares down around 9%. Sims, which is the metal recycling company, it posted a net loss of $30 million compared to a profit of $30.8 million the same time last year, and that was due to losses incurred on derivative contracts as well as a credit loss associated with its UK-based business. Despite that loss, the company still raised its dividend by 40% to 14 cents per share, but that wasn't enough to lift its share price today. Computershare traded ex-dividend. That weighed on its share price, and it's set to pay 55 cents per share on the 18th of March. And job posting site Seek posted half-year results that were largely in line with market expectations, but it did flag potential downside risks stemming from weaker volume growth in the coming periods. So that forward guidance did weigh on its share price today. Now, in terms of currencies, they're mostly lower, but ever so slightly. The Aussie dollar is currently trading at 70.6 US cents. Looking ahead, of course, Wall Street will reopen after the long weekend, but the 3 main indexes are set to open slightly lower. We have the Dow pointing down by 0.3%, the S&P 500 down by by around 0.5%, and the Nasdaq futures are down 0.8%. But as always, we still have plenty of time between now and when the US market opens, so we'll wait and see if those numbers slightly change. Looking forward to tomorrow, we have CBA trading ex-dividend. Given that it is currently the largest stock on the Aussie market, this could potentially weigh on the broader market. They're set to pay $2.35 on the 30th of March, and of course reporting season will very much be in focus. We have NAB out with its quarterly, but many other companies out with half-year results, including Suncorp, Mirvac. We have Santos, the Lottery Corp, Magellan, too many to name, so we'll give you the lowdown on all of that information tomorrow. We do also have here in Australia the wage price index for the December quarter being released tomorrow as well, so that's something to keep an eye out for. On that note, see you again tomorrow.